Hey everyone, thank you for joining me. In this video, I'm going to reveal my top stock to buy for 2024. I'm going to highlight why I like this stock and why I think it makes an excellent buy for 2024. I'm also going to talk about my top stock to buy in 2023. I'm going to reveal how that performed in 2023. So without further ado, let's jump right in. Let's see what this stock is and why I like it so much.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alphabet is my top stock to buy for 2024. And one of the reasons why I like Alphabet stock is because of the total addressable market for advertising. According to Statista, global advertising will amount to $874 billion in 2023. That was up by 6% from $826 billion in 2022. Their estimates suggest this figure will surpass $1.1 trillion by 2028. A growing share of that spending is moving to digital channels like YouTube, Google Search, and Instagram. Digital advertising totaled $522 billion in 2021 and is expected to reach $836 billion by 2026. It's understandable that digital advertising will grow to take a larger share. This type of advertising can be more targeted, focusing on a specific group in the population, like 22-year-old male college students or 34-year-old females with children. It's also easier to measure the effectiveness of digital advertising. How many people clicked your Amazon advertisement and made a purchase? That would be informative. The companies that will benefit from this trend include Alphabet, Meta Platforms, Netflix, and Pinterest. Additionally, companies with popular websites like Amazon, eBay, and Walmart will benefit as marketers will seek to influence the purchasing decisions of shoppers. That being said, a massive market opportunity is one of the most attractive characteristics I look for when I'm making an investment. It's not the only thing, but it's one of the things that I look for. Also, you look at Alphabet revenue over the last decade exploded from around 70 billion in 2015 all the way up to 297 billion in the most recent trailing 12 months. And given the transition from legacy methods of advertising to digital methods of advertising and the massive market opportunity, there is still room for Alphabet to continue growing from here. Indeed, analysts expect Alphabet to grow revenue by 11.3% in 2024 and another 10.5% in 2025. That's expected to lead to a 15.6% increase in earnings per share and another 15.8% growth in earnings per share for the year after that. So, double-digit growth expectations for Alphabet over the next 2 years. These aren't explosive growth estimates. This isn't like there's so much hype around Alphabet. So it's reasonable to assume it will hit these targets, and it's reasonable to assume there's a chance that Alphabet will exceed these targets over the next 2 years. Of course, my top stock to buy in 2023 was Airbnb. Airbnb was my top stock to buy in 2023. The company returned 59.23% for the year. However, I gave an update around the middle of the year. I would say it was actually May 9th when I provided investors an update saying it was time to take profits. And I can share that with you here. Here's when I released the video saying my top stock to buy in 2023, time to take profits, and it was up 48.66% at the time I made that video. So if you had taken my top stock to buy recommendation in 2023 and you followed along the way I recommended to, you would have made 49%, 48.66% to be precise. That's an excellent return. I would have been happy with half of that or a little bit above half of that return. That's about what the S&P 500 returned. So anything above 23, 24% is excess return, and you got plenty of that with Airbnb. If I get a similar performance with my top stock to buy in 2024, I would be happy with that result. In fact, I do own Alphabet stock. I've owned it for several years, and it's my top stock to buy in 2024. Another reason why I like Alphabet stock is the lucrative business model. The advertising business model is lucrative. Alphabet has generated 26.51% operating profit margin in the most recent trailing 12 months. That's about where it averaged over the last decade. And remember, in 2023, the company announced thousands of job cuts and streamlined the business. So it's likely that they removed a lot of waste from the business, and I like to see that. One of the announcements that came out was that they laid off massage therapists they had working at Alphabet, other perks and things like that. I was glad to see that. I felt that Alphabet had gotten a little bit bloated in terms of the employee count and the wages that they're paying employees. The wages for Alphabet employees are not on the lower end. These are higher end employees, and so job cuts in the thousands of these higher paid employees is going to reduce their expenses meaningfully going forward, and you're already seeing the benefit of that result here as the operating profit margin is ticking higher, 26.51%, and given the expectations for increases in earnings per share over the next 2 years, I wouldn't be surprised if this operating profit margin ticks closer towards 30% over the next 2 years. It's a similar story with Alphabet and its cash flow from operations to sales. This metric measures how much of its sales turns into cash flow. So out of every $100 in sales that Alphabet generates, $35.82 turns into cash flow from operations. That's a solid margin, and it's been about this level for the last decade with fluctuations up and above and down and below, but over 30% and below 40% for the last decade for Alphabet. And again, for the same reasons I mentioned about the operating profit margin, I wouldn't be surprised if this ticks higher, closer towards 40% over the next couple of years. Additionally, Alphabet has an absolutely pristine balance sheet. $119.9 billion in cash and short-term investments and only $11.87 billion in long-term debt. Now, this is excellent for a number of reasons. I'll highlight two reasons. Number one, $119 billion in cash. Given that you can get over 5% in money market funds or over 5% in short-term government bonds, Alphabet can generate $5-6 billion in interest income in 2024 from this cash. That's $6 billion in profits just from the cash, just from putting that cash in super safe government bonds. Another reason why this is great is because Alphabet has been buying back stock, and this massive cash balance puts a bit of a floor on Alphabet's stock price. It puts a bit of a floor to how low Alphabet's stock price can go, because if Alphabet's stock price falls considerably lower, then it's reasonable to assume that Alphabet management will put more of this cash to work in buying back their stock. Now, it's been widely reported, and it's my opinion also, that this is way too much cash for Alphabet to hold. It's sitting around. It's not working. They should do more buybacks. They should do more investing. They should look for more acquisitions to put this money to work. But it's difficult to use this much money. It's difficult to spend $119 billion effectively without feeling like you're wasting it. So for that reason, I think buybacks are an excellent way for Alphabet to start returning some of this capital to shareholders. And that's typically good news for a share price. It also puts a bit of a floor on a share price, which is something that I appreciate when I'm looking at Alphabet stock. And finally, the stock is relatively cheap. Alphabet is trading at a forward price to earnings of 17.63. And given everything we looked at, given the business model, given the strength, given the market share, given its competitive advantages, all of those things considered, I think buying this stock at a price to earnings of 0.63 is an absolute bargain. And so for all of these reasons I talked about in this video, I'm recommending Alphabet stock as my top stock to buy in 2024. And just like in 2023, I will be providing updates on this stock. I will let you know when or if there's an opportunity to sell to take profits, or if it's still a hold. So I'll be updating this stock throughout the year so you can follow along in case there's any major changes. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.